Welcome to The Explainer. Today we're diving into a company that, let's be real, practically built the foundation of the modern mobile world. When you hear Qualcomm, you probably instantly think of that Snapdragon chip sitting right inside your smartphone. But if you look closely at their 2026 earnings, their recent acquisitions, and those massive Investor Day announcements, a totally different picture emerges. Qualcomm is going through this profound evolution. They're not just a smartphone chip maker anymore. They're transforming into a full-stack AI platform provider, literally spanning from the edge all the way to the cloud.
And the scale of this ambition, it is absolutely staggering. We're talking a projected total addressable market of $1.7 trillion by 2030. Trillion with a T. To even chase a number that big, you essentially have to rewrite your entire corporate roadmap. Over the next 3 to 5 years, they're positioning themselves right at the center of some critical technological inflection points. Think data center infrastructure, automotive systems, industrial robotics, and next-gen edge devices.
So that brings us to the multi-billion-dollar question, right? How exactly does a company historically anchored to mobile handsets plan to capture the broader AI revolution? How are they going to compete with the cloud giants and those dedicated AI hardware companies? Well, spoiler alert, it's all about owning the edge and completely redefining the compute continuum.
Okay, let's look at the roadmap. 1. Beyond the smartphone. 2. Navigating memory supply headwinds. 3. The automotive and IoT boom. 4. Entering the data center. And 5. The agentic AI era.
Section 1. Beyond the smartphone.
Now, pivots of this size require a massive war chest. In early 2026, alongside bumping their quarterly cash dividend up to 92 cents a share, Qualcomm's board authorized a jaw-dropping $20 billion stock repurchase program. And keep in mind, this is after they already completed $5.4 billion in repurchases just in the first half of fiscal 2026. When a company returns that much capital to stockholders while simultaneously funding huge new ventures, that screams operational confidence in their cash flow.
Historically, Qualcomm has lived and died by the mobile market. But look at this incredibly aggressive goal from management. By fiscal 2029, they expect this historic rebalancing where 67% of their QCT chip revenue will come from non-handset sources. Just 1/3 left to smartphones? That is a fundamental rewiring of their entire business model.
To actually hit that 67% mark, they're targeting $40 billion in non-handset revenues by 2029. Break that down, and they expect $10 billion from automotive, over $14 billion from the Internet of Things, so that's your industrial robotics and personal AI compute, and an incredibly ambitious target of over $15 billion from the data center space. We're going to unpack each of these, but first, we really need to understand the immediate market pressures that are kind of forcing their hand here.
Section 2. Navigating memory supply headwinds.
The massive AI boom has brought this fascinating, really unintended consequence. Because everyone is rushing to build AI data centers, memory manufacturers like Samsung, SK Hynix, and Micron are redirecting their capacity to highly profitable high-bandwidth memory for cloud servers. The result? A sudden, global squeeze on the conventional, legacy DRAM supply that's used in smartphones. It's just a classic supply and demand shock. Less smartphone memory available means higher prices, and that constrains handset production volumes for OEMs across the board.
So the crucial point is that this dynamic took a direct hit on Qualcomm's legacy business. In Q2 of fiscal 2026, handset revenues dropped 13% to $6.02 billion. Chinese Android shipments actually fell below end consumer demand just because of these memory constraints. Now, management does expect the Chinese handset market to finally bottom out in Q3 before returning to sequential growth. But man, this perfectly highlights the risk of relying purely on a volatile mobile market, doesn't it?
Section 3. The automotive and IoT boom.
Okay, look at this stark contrast. While handsets were down 13% in Q2 2026, automotive surged by an incredible 38% year-over-year to a record $1.32 billion. Add in a 9% bump in IoT to $1.72 billion, and those two segments combined grew 20% year-over-year. So this diversification strategy isn't just some vague promise. It is already showing up right there on the balance sheet.
And you know what? That automotive success is definitely not a temporary blip. Qualcomm's automotive design win pipeline has expanded to a mind-blowing $65 billion. This is largely driven by their Snapdragon digital chassis. I mean, over 1 million cars are already operating advanced driver assistance systems and autonomy on their Snapdragon Ride processors. That's $65 billion?
That represents locked-in future revenue that's going to fuel their push toward that $10 billion annual automotive target by 2029. Furthermore, they are aggressively expanding their IoT portfolio. At CES 2026, they rolled out the new Dragonwing Q-series processors, which are specifically designed to power industrial robotics and physical AI right on premises, no cloud reliance needed. And they aren't just building organically either. They've made a rapid string of 5 strategic acquisitions over the past 18 months, grabbing names like Arduino and Edge Impulse to make absolutely sure they own the robust developer ecosystem they need to hit that $8 billion industrial and robotics target.
Moving on to Section 4, entering the data center.
Qualcomm is not just dipping a toe in the water here. They are diving headfirst in to compete for AI infrastructure. To capture that $15 billion target by 2029, they've launched a brand new portfolio called Dragonfly. Even more critically, they announced a custom silicon engagement with a leading hyperscaler, and that is on track for initial shipments later this calendar year. Add a strategic, multi-generation CPU agreement with Meta and an expanded partnership with Hugging Face to the mix, and it becomes super clear. The cloud giants are actively looking to Qualcomm to diversify their own hardware dependencies.
But look, as any tech analyst knows, in the AI space, hardware is literally only as good as the software that runs it. To compete with the incumbents who already have deep software moats, Qualcomm announced the critical acquisition of Modular. This move is squarely aimed at bolstering their unified software stack and developer tooling. They're making sure that developers can easily build and deploy AI models right on Qualcomm's Dragonfly architecture.
Finally, Section 5, the agentic AI era. So what's the unifying theory behind putting chips in everything? Cars, robots, data centers, phones. Well, the entire compute continuum is shifting. We're moving away from that simple prompt and response AI to agentic AI. These are autonomous AI agents running continuously in the background. They feed sensor data into context, orchestrate multi-step tasks for you, and demand really robust security. Crucially, they require massive continuous processing power right there on your device without completely draining your battery. And honestly, this is exactly what Qualcomm's world-class CPU and NPU architectures are built to deliver: high performance at a super low power draw.
As CEO Christiana Amon perfectly summarized during their Q2 earnings call, this isn't just a shiny new feature to sell phones. The rise of AI agents is fundamentally rewriting Qualcomm's entire hardware and software roadmap. Today's massive installed base of devices, they simply aren't built for these new agentic capabilities, which means we are standing right on the precipice of a massive, multi-year upgrade cycle across both consumer and commercial hardware.
Looking to the horizon, Qualcomm is already mapping out how this AI era will converge with next-generation connectivity. They've outlined their timeline for 6G, which is basically being designed from the ground up for the age of AI. They're expecting prototype demonstrations in first silicon by 2028, early ecosystem launches by 2029, and global scaling by 2030, seamlessly connecting these entirely new classes of intelligent, autonomous devices.
Which leaves us with this final thought. We're witnessing an absolutely incredible pivot. By diversifying so aggressively into automotive, industrial IoT, and the data center, Qualcomm is essentially betting $1.7 trillion that the future of AI isn't just sitting in centralized cloud servers, but distributed constantly around us at the edge. So will this massive transformation secure their dominance for the next decade of intelligent computing? Well, only time will tell. But their roadmap makes one thing very clear. They are playing to win. Thanks for joining us on this explainer, and we'll see you next time.